What is good, YouTube? It is your boy Sam, and I am back with another video. I'm excited to drop this next video. I've been consistent, right? I hope you guys have been following the journey. Make sure you guys don't miss the next video and subscribe so that we could grow the channel and expand our community, right? This will also be a good place for us to network. So make sure you comment, right? I'm more than happy to read the comments, more than happy to respond and engage with you guys, because like I said in the first video, I am not coming to you guys as a teacher, but I'm coming to you guys as a student. And so we're going to learn from each other. Okay, so make sure you subscribe, you like, you comment, and you share this video. Okay, so in today's topic, we are going to be discussing choosing the correct chart for the trade that you want to make. Okay, now what do I mean by that? Right, so when it comes to trading and investing, right, we have a lot of, short-term trades that you could do, as well as longer-term trades. Okay, now what chart you look at is very important depending on which one it is that you want to do. So for example, if you plan on buying a stock and holding it for the next 1 year to 5 years, it's very important that you look at those time frames prior to making that trade, right? So if you plan on holding on to something for 5 years, you want to look at the 5-year chart for sure. Okay, and similar to the 1-day chart for someone who wants to day trade, because that's the chart that you should be looking at, as well as the week chart, these stocks essentially move in a similar pattern. Okay, it's all really much the same. The ratio is pretty much the same, just on different scales of time. Okay, so if you're plan on buying a stock and hanging on to it for the next 5 years, and you plan on making money off of the upward trajectory, you want to look at the 5-year chart so that you can see how it has moved in the past 5 years and where it is projected to go. Now, obviously, we can't predict the future. If we could, we all would be rich. Okay, but based off of certain indications, certain patterns, you could have a good idea or make a better prediction, have a higher probability of being correct. With that being said, if you see a stock has a lot of resistance at a specific level, we talked about support lines and resistance lines in previous videos, so if you haven't seen that, go check that out. But if you see a stock super high, it's at its resistance zone, okay, before just buying in and hanging on to it long term, you want to have a good entry point, or you want to have a better entry point than just randomly getting it. Okay, so that's something that you're going to want to monitor. You're going to want to see how it reacts at those levels. If you spot a pattern for a potential pullback, that's definitely something that you're going to want to wait on, so that when it comes down, you have a better entry. And don't forget, you're not doing market orders, right? We're doing limit orders, setting a limit on where exactly you want to get at, and essentially being in control as opposed to letting the market control you. Now, that same 5-year chart is 100% irrelevant, okay, if you are planning on swing trading or day trading that stock. Okay, you might think it's relevant, but it's not. It's just a very far spectrum of what has happened in the past 5 years, which may look clean and may influence your thoughts in terms of what you think is going to happen. But note that that is irrelevant. That is like using satellite images to park a vehicle. You do not need to be that far out. Okay. With that being said, make sure you use the appropriate chart for however long you plan on hanging on to that trade. Okay. So now, when it comes to day trading, right, I dropped a video before speaking on candlestick charts and how you can use those to analyze what the market is doing, have a clearer illustration of what the market is doing. And so choosing the correct time frames is also very important within that day chart as well. Okay, now a minute chart or a 1 minute candlestick is valuable, but it may not look as clean as, let's say, a 5 minute candlestick. 5 minute candlestick, it just kind of blocks out all the noise, right, and just tells you what happened in the past 5 minutes, and that can give you a clear picture of what's going on. Okay, the same with the 15-minute chart, or the same with the 30-minute candlestick chart, right? These are all important in analyzing your entry point. Okay, now if you're swing trading, and for those of you that don't know, day trading is when you make multiple trades of the same company within a day, which can be limited, by the way, because you need a certain amount of capital. And I don't remember off the top of my head how much capital it is that you need to be able to make an unlimited amount of trades of the same company in the same day. But if you don't have that certain amount, I think you're limited to maybe 2 or 3 trades of that same company within a single day. I know it sounds ridiculous, but that's just kind of how it is. And that is another example of the phrase, the rich get richer and the poor get poorer, right? The less capital that you have, the more limited you are into what you can do. And it doesn't always necessarily make sense, but that's okay. The goal is to get enough capital and limit our restrictions and not let the restrictions limit us. Yes, that's right. Okay, so like I was saying, if you're doing day trades, right, you want to look at, the week chart. You want to look at, the day chart, and keep in mind the candlesticks that are a longer in duration. So for example, like a 5 minute versus a 1 minute provides a clearer picture of what that stock wants to do, or essentially what the traders are looking at, right? Because everyone's looking at something different. Everyone has a different perspective of what the market is doing. Okay, and the more people that's on the bandwagon, the more likely it is to do that thing. So the clearer the picture, the better you can make a prediction. It doesn't mean it's guaranteed to do that. It can do the complete opposite of what it is that you see. Okay, but history doesn't lie, right? So you could base your predictions based off of what you've seen it do in the past minute, or the past 5 minutes, or the past 15 minutes, or the past 30 minutes, to make moves within the next minute, 5 minutes, 15 minutes, 30 minutes. Okay. When it comes to, like I said, the 1 year and 5 year charts, right? You really want to look at those only when you plan on hanging on to a particular stock for that long. Okay. With that being said, if you notice on a 5 year chart and you plan on having this stock for the next 5 years, it is reaching its resistance zone. You don't want to just buy in and be bullish, thinking it's going to just continue to go up. Okay, not saying that it can't, but that's definitely something that you want to monitor to see if it holds. If it holds, that might be a good indication to buy in and ride the wave up. If there's a lot of resistance or it's trading sideways, you might want to wait a little bit. You might want to monitor to see if there's a pullback so that you could enter in at a good price and essentially ride the wave back up. Okay, and it's the same thing for something you plan on trading in the next couple of days, right? But you don't want to use that 5 year chart and let that affect your decision into buying and selling a stock if you plan on selling it within the next couple of days, right? You want to focus on maybe that month chart or a week chart just to kind of see what it's been doing in the past week or the past month, to give you an idea of what you want to do in the next week and the next month. Okay, so making sure you use the appropriate charts are very important. With that being said, okay, make sure you utilize as many tools as you can, or you favorite your indicators that you work best with, right? Because a lot of people are going to project their strategies and their indicators onto you. And it's definitely something to keep in mind, right? But that doesn't necessarily mean you have to run with it. You might see something else that someone else doesn't see, or they might see something else that you don't see. And there's nothing wrong with that, right? It's not necessarily designed for everyone to see the same thing. You guys can have the same indicators, could be looking at the same charts, right? Could be looking at the same resistance zones, the same support zones, and still have a different prediction as to what you think is going to happen. And that's perfectly fine, right? There's no right answer here, okay? These prices are not also predetermined, okay? It's all about the investors, what people are seeing, what the majority of people are seeing, and where they're placing those orders. That's what's going to drive which direction the price essentially wants to go. Okay, I hope that makes sense. You know, comment, let me know what it is that you guys want to talk about, and I'll see you on the next video. Thanks for the support.